Now here's an interesting stat you would never expect to hear. This is from the Sovereign Man, sovereignman.com. Through his subscription, his email blast every day or every few days. Sovereign Valley Farm, Chile, from the Sovereign Man. That's where he's at. In the year 1517, one of the most important innovations in financial history was invented in Amsterdam, and that is the government bond. It was a pretty revolutionary concept. Governments had to borrow money for thousands of years, quite often at the point of a sword. Italian city-states like Venice and Florence had been famously demanding forced loans from their wealthy citizens for centuries. But the Dutch figured out how to turn government loans into an investment. It caught on slowly, but eventually government bonds became an extremely popular asset class. Secondary markets developed where people who owned bonds could sell them to other investors. Even simple coffee shops turned into financial exchanges where investors and traders would buy and sell bonds. In time, the government realized that its creditworthiness was paramount, and the Dutch developed a reputation as being a rock-solid bet. This practice caught on across the world. International markets developed. English investors bought French bonds. French investors bought Dutch bonds. And Dutch investors bought American bonds. By 1803, Dutch investors owned a full 25% of U.S. federal debt. By comparison, the Chinese own about 5.5% of U.S. debt today. Throughout it all, debt levels kept rising. I want you to think about that. Debt levels kept rising. What have my videos of the last 2-3 weeks specifically been about? $4 in debt must be created today to create $1 in GDP, gross domestic product. That's a no-win situation. That is you're falling off a cliff moment that will be coming soon. That's where we're at. Again, debt to GDP ratio across the world is about 300% or 3 times. 3 times debt to GDP. This is not even kind of sustainable, which is why I look at these markets rallying, baby. There's no looking back. Boy, there's a lot of ways to part a fool with his money. And again, the suckers rally. As Lindsey Williams correctly did say years ago, from 2008-9 forward, you will see a suckers rally. It'll go to levels you never thought possible. And when you think it's done going up, it's going to go up even higher. And when you say there's no way in the world, there's nothing that can make it go higher, it's going to go higher. Is that what's happened? Absolutely. And I think the days are getting numbered, right? So what did he say here? Throughout all of this, even back in the history we're talking about right now, debt levels kept rising, not being paid off. Got it? What are we having Wednesday? Debt ceiling meeting. Kick the can meeting. Why? Because history says right here, throughout it all, debt levels kept rising. How do you think this ends? How do you think Wednesday's going to go? Again, chances are, raise the debt ceiling. Keep doing what we do. Just keep doing what we do. But they may throw the monkey wrench at Trump. Let's make that guy look bad and blame all this that's about to happen because we won't raise the debt ceiling and blame it on him. What if they kick this thing all the way to September and they can't come to an agreement, and then all crap, the big September 23rd time frame happens, and then boom, massive economic collapse, as in markets go kaputs. You never know how it's going to play out. Again, history tells us just keep fueling the debt fire. Just kick the can, raise the debt ceiling. Let's just keep going. So he says the Dutch government used government bonds to live beyond its means, borrowing money to fund everything imaginable, wars, infrastructure, and ballooning deficits. You don't say. This has happened, but I gotta scratch my head with almost no hair. Wait a minute. This has happened all before? You mean this isn't something new in all of our awesome technology and advancement? Well, no, we're using ancient monetary system practices, fractional reserve lending, printing paper money with nothing backing it, allowing a privately owned central bank to issue the money, and then bail out its friends when they bet on things and lose. Oh, well then it all makes sense again. It's all going to end the same way again. I mean, isn't it? Isn't that how, I mean, it's pretty obvious. But people kept buying the bonds, he says. The people kept buying the bonds, convinced that the Dutch government will never default. Everyone was brainwashed. The mere suggestion that the Dutch government would default was tantamount to blasphemy. Let's call the Catholic Church over here and behead somebody for even suggesting something. It didn't matter that the debt level was so high that by the early 1800s, the Dutch government was spending 68% of tax revenue just to service the debt. And what's going to happen to our tax revenue that has to service the debt when the interest rates start rising? As is about to happen. As the Federal Reserve has pretty much said now 100% we are going to raise rates Wednesday. And then 3 months later we're going to do it again. Higher interest rates, higher debt load all of a sudden because we owe more interest, which means the payment just goes up. It's no different than when you had the adjustable rate mortgage and you had it at whatever percentage and then it went up a 0.5% or full percent. Oh, I can't make my mortgage payment anymore. That's it. I'm done. That little percent blew up. Can't make my payment anymore. I'm finished. Bankruptcy, walk from the house, foreclosure. All from that little thing. That little blip up caused all that. And how much U.S. Treasury debt is out there versus the mortgages that had this issue? Many, 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 many times over. So he says, well, in 1814, the impossible happened. The Dutch government defaulted. And the effects were devastating. In their excellent book, The First Modern Economy, financial historians Jean de Vries and Ad van der Wood estimate that the Dutch government default wiped out between 1/3 and 1/2 of the country's wealth. That, of course, is just one example. History is full of events that people thought were impossible, and yet they happened. Looking back, they always seem so obvious. Oh, how did we not see that coming? Oh, yeah, right? That's why I'm here doing these videos every day. People, please wake up. See what's about to happen. Look at history. I know a lot of you already know this because you're my subscribers. You hear me screaming about it all the time, and you've done the research yourself. You know what I'm saying is true, but this is like, again, all the new subscribers. Listen to me. It's coming. What time? Exactly when? I don't know. And they didn't know either then. But when you add, fire to something that's highly flammable, it's going to explode eventually. You're just throwing sparks at it. What happens when one of those sparks catches? Well, I thought you said it would be the second spark. No, I thought it might be. It ended up being the 5th or 6th spark. They somehow enabled it to go a little longer. It was the 6th spark. In other words, 2015 went by, 2016 went by, now we're in 2017's year. Maybe it's not. Maybe it's 2018. All I know is you better be prepared for it. But at that time, there was always some prevailing social influence, some wisdom from the experts that made otherwise rational people believe in ridiculous fantasies. Today is no different. We have our own so-called experts who peddle ridiculous and dangerous fantasies. You might know it as the mainstream media, mainstream economists, mainstream financial experts who tell you everything's fine, markets are great. Case in point, this week, yet another debt ceiling debacle will unfold in the land of the free. You may recall the major debt ceiling crisis in 2011. The U.S. federal government almost shut down when the debt ceiling was nearly breached. Then it happened again in 2013, at which point the government actually did shut down. Then it happened again in 2015. You see that? 11, 12, 15, right? Every couple years. When Congress and President Obama agreed to temporarily suspend the debt ceiling, which at the time was $18.1 trillion. That suspension ends this week, at which point a debt ceiling of $20.1 trillion will kick in. There's just one problem. The U.S. government is already about to breach that new debt limit. The national debt in the land of the free now stands at just a hair under 20 trillion. In fact, the government has been extremely careful to keep the debt below 20 trillion into anticipation of another debt ceiling fiasco. One way they've done that is by burning through cash. At the start of this year, in January, calendar year in January, federal government's cash balance was nearly $400 billion. On the day of Donald Trump's inauguration, the government's cash balance was $384 billion. Today, the government's cash balance is just $34 billion. Google, by the way, he says, and this is why I said, the title was the U.S. government now has less cash than Google, and I said in the beginning, what you're about to hear, you would never expect to ever hear about the United States. That's what I was referring to. That Google, and some other companies for that matter, now have more money, twice as much as a matter of fact, with cash reserves exceeding $75 billion than the United States. This isn't about Trump or even Obama or any other individual. It is about an inevitability that goes hand in hand with decades of bad choices that have taken place within the institution of government itself. Public spending is now so indulgent that the government's net loss exceeded $1 trillion in fiscal year 2016, according to the Treasury Department's own numbers. When have you seen $1 trillion net loss? That's extraordinary, especially considering that there was no major war, no recession, no financial crisis, or even substantial infrastructure project going on. Basically, business as usual means that the government will lose $1 trillion annually now. Moreover, the national debt increased by 8.2% in fiscal year 2016, while the U.S. economy expanded just 1.6%, according to the U.S. Department of Commerce. Now they have plans to borrow even more money to fund multi-trillion-dollar infrastructure projects. Then there's the multi-trillion-dollar bailouts of the various Social Security and Medicare trust funds. And none of this takes into consideration the possibility of a recession, trade war, actual shooting war, or any other contingency. And I'll add to that. Or a dollar devaluation war, currency war, race to the bottom. This isn't a political problem, it's an arithmetic problem. And the math just does not add up, he says. The only question is whether the government outright defaults on its creditors, defaults on its promises to its citizens, or defaults on the solemn obligation to maintain a stable currency. But of course, just like 2 centuries ago with the Dutch, the mere suggestion that the U.S. government may default is tantamount to blasphemy. Our modern experts tell us that the U.S. government will always pay and that a debt default is impossible. You remember when little Timmy Geithner came out when he was Treasury Secretary, and they asked about could the U.S. lose its credit rating? Could it ever go down? Absolutely not. You're sure? Unequivocally, there's no chance ever. It'll never happen. And then right after he said that, it happened. AAA rating just got knocked down. Whoa, Timmy Geithner, man, I thought you said that was impossible. Oh, it happened. Well, we're living in a world where the impossible keeps happening, so it's hard to imagine anyone will be worse off seeking a modicum of sanity and safety. Do you have a plan B, he says. Simon Black, founder of sovereignman.com. Well, I do have a plan B, and I know a lot of you do too. It's called precious metals, and it's called Bitcoin. And in the near future, it might also be called First Majestic Silver shares, company shares. That's my diversification. Physical silver, mining company silver through the stock, and Bitcoin, which is acting like gold and silver online. Even though it's digital and backed by nothing and it's in the ether. You can't argue with $1,200, $1,300 Bitcoin. You cannot. So, anyways, Mr. Simon Black, I think he nailed it. Take care.